So let's go on and talk a little bit about COVID and some of the numbers. So what we're seeing in US cases, hospitalization versus fatalities. If you look at the graph, the top line, the dark line is hospitalizations, and that was coming down significantly, but has started trending up the last 2 to 3 weeks, mostly out west, like we said. Daily new cases is also on a rise. That's the blue line, which is now above the hospitalization line. And if you see at the very end, there looks like a little bit of a flattening. We'll talk about that. And then the good news in this chart is that the daily new fatalities is still continuing to drop, but this can lag hospitalizations a little bit. So let's go a little bit into more of the numbers here. Fatalities projected to increase moving forward with the increase in hospitalizations. But if you look at the dotted line versus the solid line, you can see that what's being projected over the next couple of months is a slight rise. However, nothing near what we were seeing in April. So I'm going to drop off here and keep going. Fatalities as a percent of hospitalizations. This is another good piece of information that the number of people going into the hospital and actually dying from COVID is decreasing and continuing to decrease. Early signs of slowing spread in several hotspot states. So let's talk about where the issues are at right now, and that is in Texas, California, and Arizona. And you can see Texas has had quite a good surge increase taking place in hospitalizations. That's something that we have to pay attention to. California and Arizona, however, they were increasing, but what we are seeing is a flattening of that curve and actually a little bit starting to move trend downward. So these are very positive signs moving forward, and we're expecting similar data in about a week or two in Texas, that we'll see a flattening taking place there. Again, these states have upped their distancing procedures and requirements for wearing a mask. Some of them have closed the bars and things like that down to start reducing, again, the spread of the virus. And we think that's going to be a positive trend moving forward. Good news here, testing has surpassed the initial goals. The initial recommendation was to be testing about 4 million people a week for the virus, and we've actually exceeded that in the last week or two. So we're over about 4.5 million tests being conducted weekly. And along with that, the chart on the right shows we have seen a slight increase in the positive test rates. However, it's still relatively low compared to the amount of testing that's actually taking place. So let's go on to another section here. Let's talk a little bit about the reopening and unemployment. So where are we standing in the last week or two? And this first chart is basically measuring consumers going out to dine at restaurants and things like that throughout the country. And as you can see, there's been an increase since about the middle of May. However, here in June, in the last couple of weeks, it's gotten a little bit more volatile, the willingness of people to go out. And again, that's due to the fact that we've seen a rise in Texas, Arizona, and California. So things are slowing down a little bit. However, we still see an uptrend in this and believe that there's going to be more and more people getting out and being willing, if they're following the procedures, the social distancing, wearing masks where required, things like that, that we should still see good positive response in decreasing the spread moving forward. Another area that we were looking at in the last couple of weeks is what's going on in the service industry. And this chart represents non-manufacturing purchasing managers. what they're buying. So this is the service industry purchasing managers and what they are buying to get their businesses back up and running, the materials, the supplies, things like that. And we are seeing increases in purchases for businesses to continue to operate. Even though it's not near where we want it to be, it's a much, much better than what it was. The unemployment rate. Now, just a couple months ago, the unemployment rate was about 14.7% in April, but we've seen it drop a little bit more than expected. So we are seeing some initial strong recovery in unemployment. If you notice in this chart between April and June, May is also lower. What happened is they readjusted the number for May. If you remember, we showed a chart a couple weeks ago that showed a slight increase in May. That number has been revised and brought back down. So through June, we're looking at about 11.1% unemployment, which is an improvement. However, there's still quite a few people unemployed, and we're going to talk a little bit more about that in this chart. So basically here what you're seeing is we've plotted the temporary layoffs versus the permanent job losses. And these are being tracked and again studied on an ongoing basis. So where we were seeing in April an 18 million temporary layoff situation, we're looking at about a 2 million permanent loss in the job market. Well, those numbers now through June are at 11 million temporary layoffs, and about 3 million, they're saying, is going to be permanent job loss. Where are those permanent job losses coming from? They're coming from companies that basically are not going to reopen. Businesses that are reorganizing based off of needing to operate a different way in this environment and changing their jobs and employment strategies and things like that. So we do expect a little over 3 million, possibly 4 million in permanent job loss as a result of COVID. But the good news is that the layoffs are gradually slowing down. Temporary layoffs are turning back into jobs, and people are getting hired and brought back into those positions. One of the questions we keep getting in the office is, when do we expect a full recovery? And what City National Rockdale did is project here where they think the gross domestic product path of the United States is going to be over the next couple years. So as you can see in this chart, we bottomed out in Q2 of 2020, but the path is showing getting back to the previous gross domestic product for the United States. That's all goods and services produced on an annual basis. It's going to take us till about the beginning of 2022. They're estimating somewhere between the first and second quarter that we will be back at full gross domestic product growth in the United States. So it is going to take a little bit of time for this economy to grow back.